Okay, so hi everyone. We are quite happy and excited to make this presentation to you today. So today we are going to talk about, how you can explore the investment funds or fund formation field of law to practice after graduation. I'm sure you will have questions at the end of the session about whether there could be any master's program in such a field of law. Should that be the appropriate route to choose after graduation before starting this practice? We'll hopefully have enough time to answer all your questions, but during the presentation, if you have anything, please feel free to type in the chat box or just raise your hand. We should be able to take up questions as and when they arise. Today we are going to start with some brief understanding of what this practice area entails. We will talk about the subject areas that it covers in terms of legal subjects. Uh, Hopefully, you would have most of you have already learned a lot of these subjects. But when you're on the job, you learn a lot differently than when you're in law school. We will also talk about the cross jurisdictional aspects of this practice and what is expected out of a practitioner from the beginning itself. So I will hand it over to Divya and I will keep pitching in as and when required.
Okay, it's fine. Anyway, thank you for the introduction, Natalia. I think since Nandini has already put forward what exactly you're going to discuss for this webinar, we'll just right now start with discussing the fundamentals, the insights, and later on talk about the opportunities. How exactly you can build up a career, or what are the things, or what are the skills that are required for a funds lawyer to make a career in this particular practice area. So now, before we start with this presentation, just let me confirm: is this screen visible to everyone?
Yes, sir.
Okay. So before we start with the webinar, I think it's also important that since it's already 3 o'clock and you guys might have your lunch right now, to not make it more boring. So I'm just taking you through a slide why you should pay attention in this webinar. You can do your own guessing game over here, but yeah, first and foremost, yeah, there is fun in funds. Second, we spent a lot of time making this PPT for you guys. Third, AFs are definitely have the potential to cut across different practice areas. And how does that happen and what are the exact USP in that particular thing? We'll be discussing that while we go through the slides. So yeah, why should you definitely pay attention in this webinar? So these are the four options, four not options. These are the four reasons why you should definitely pay attention. The first being there's fun in funds. That's anyway fun. Now we have definitely spent a lot of time making this PPT for you guys to know about what are the fundamentals, what are the insights, and how exactly can build up a career in this particular practice area. Third, AIs definitely have the potential to cut across different practice areas. And how does that happen? We'll talk about that in brief while going through our slides. Fourth, I think after this webinar, you might try to or look forward to consider a career in this practice area because I understand in terms of law syllabus, definitely you don't come across any SEBI regulated laws or any SEBI regulated regulations in as a subject for a practice area, just like how you deal with companies laws. You don't find yourself deal with SEBI AF regulations or a SEBI portfolio manager regulations. This webinar might probably help you take a decision call on that aspect. Now, before we start with the fundamentals, I just want to understand, it's also necessary to understand why do people invest in funds. Now, when in terms of student, even you obviously we rely on the pocket money right now. We do not have our own income, but even at this stage, you guys have an idea like where do we need to invest. The traditional sources of investment for a particular for an individual could be saving some cash or investing in stocks, or maybe you open up a savings account or a fixed deposit account with a bank. The main reason of all these investments is to just beat inflation and get some return over a course of time. That's what we do. All normal people, all that's the traditional sources of thing. Just like how the AIF alternative investment fund is nomenclature. The word alternate starts from the fact that it's not a traditional source of investment. It's different from how you invest in the stock market or how you open up a fixed deposit account with your bank. Now, to give before we start exactly how exactly this is structured, to make it more relatable on a student scale, I think it's more important that you guys relate to this. Let's take an example of the cultural committee of your college, right? I understand the cultural committee of a college definitely has some a key festival to which they host, right? It might be Gulgulan or maybe the intercity inter college fest. But for that whole fest, there's a committee who takes care of all the activities. The committee reaches out to the sponsors for different types of brand value and obtain some source of funding from them. And thereafter, it's the prerogative of the committee to decide on how they're gonna utilize that money. They might probably put it in to get some good DJ player or to put it to some good functions or get some good performances or maybe on the tent or decor. These are the like line items which you can probably utilize that money. So this is exactly what you have already been doing at your student level. This is exactly that isn't done at a commercial level. That's how funds typically work. A fund is set up, they pull investments from different investors, they get that money, then thereafter they take the call where do they want to invest or utilize the money in different portfolio companies. Just to relate, this is how exactly a fund works. Now, before we started, why people invest in funds and what are the reasons for and people to invest in an AIF as compared to a stock market or a mutual fund. Basically, I think I assume that people might have an understanding of what exactly a mutual fund is. I mean, you just like how even in mutual fund, it's meant for retail investors. You can start investing with the money of hardly 500 rupees per month. You don't need 10,000 or 14,000 or 15,000 to see that, this is something where I can invest right now. You don't need that. There's no barrier in that sense. In terms of AIFs, the main reason why people invest it's more about the diversification of portfolio. There's like 4 or 5 reasons, and it is mainly targeted to cater to the investment opportunities of sophisticated investors. When I say sophisticated investors, it means high net worth individuals or any development financial institutions. We'll talk about the kind of investors who typically cater to in our later slides. We can obviously talk about it in detail in that way. The other reasons for why people definitely invest in AIFs there's a tax pass to status for category 1 and category 2 AIFs. Just to give you a brief idea of how exactly that works, it's like when you invest a money, you are taxed and you get some returns, you are taxed at those earnings. Now, some person has already remitted a fund to me as a manager of the fund, and the fund then invest that money into a different portfolio company rather than it being taxed at my stage and again when I gave him back the returns at his stage also, it's only taxed just like how it would have been direct investment. So it's like a see-through. Although there's a fund in between, but for all tax purposes, it's a see-through. It's like the tax purposes they will treat it as being a direct investment had they made any direct investment the way it would have been taxed, the same it would have been taxed if they made an investment through an AIF. But with an added advantage that the fund manager knows how to better utilize the money, how to maximize their returns, and how to diversify the portfolio. Reason why people go for AIFs. Now, just like how I explained that is an alternative asset platform, right? It's different from how a stock market works. You might understand that even in the last 2 years, during the COVID time, the stock market faced a crash, right? I mean, it was an all-time low. Even in the 2008 recession, the stock market was crashed. So people who invest in stock market, they expose themselves to such fluctuations because they invest in listed instruments. But when you invest through an AIF into different kind of portfolio companies, you have the flexibility to invest in listed as well as unlisted. For example, uh, all companies are not listed. I mean, just to clarify that in sense, any startup company that you're probably seeing, it's still at very early stage and they are not going for an IPO, they're not listing. But still you can invest only through an IPO, but not through a stock market. That's where you have the ability that they'll be not exposed to the stock market risk and you'll be able to get a better returns. This is something that you can do through an AI, but not through a stock market. And the last, it's being the long-term investments. Just like I said, how you invest in open up a fixed deposit account, but you put in money for at least 5 to 6 years so that you get a more matured rate of interest. That's what I think all of our parents must have been already doing that. So that's a traditional investment source. When the same strategy also applies in someone investing through an AIF, they also go for a broad investment horizon to get a long-term gains. These are the reasons why people invest in funds and people typically prefer AIF over other traditional sources of investments. Now, just like in a nutshell, I'll talk about obviously what exactly an AIF is. When I've been already speaking about AIF, just to clarify this, this stands for Alternative Investment Fund. It's a privately pooled investment vehicle. Just like how I already given an example of the how cultural committee probably sources money from different sponsors and thereafter utilize it for different line items. It pools money from sophisticated investors, could be Indian or could be foreign, and thereafter it invests in debt or equity, different markets, in accordance with the investment policy for the benefit of the investors. So just like how the cultural committee has an agenda in mind that this has to be utilized of only towards this purpose of holding this event or organizing this event. That's how the AIF also works. They understand that this is our investment strategy, and all of our investments should align with our strategy, should not go beyond whatever a strategy is. And now, while doing this, it's also important to understand what exactly we as lawyers do. We as lawyers will typically talk to the client and understand and select the fund jurisdiction. When I say fund jurisdiction, technically, obviously, we might be assuming right now that this has a global play, a transnational proficiency that is required. So different foreign or Indian investors have different needs. So some foreign investor comes up to you and asks that they want to invest in more in the overseas and less in the India market. Then accordingly, you have to decide a suitable jurisdiction for them to invest through. Second, the selection of the fund vehicle also becomes important. What form and what category? We'll talk about this form and category in the next slides. Third, it comes to a drafting stage. Like what exactly? Just like as a transactional lawyer, I think people right now in this classroom would have done some internships in the corporate law teams in different law firms. You must understand that there's a SHA, there's an say a subscription agreement, there's some financing agreements if you work in a project financing team. So these are the transitional documents that govern the whole process of how you're contractually bound to certain terms and conditions. So in an AIF, that depends on drafting the fund documents. So we have typically PPM, IM agreement, contribution agreement, and indenture. We'll talk about it in brief in the next slide. Thereafter, the stage comes to the registration of the fund with SEBI. So an AIF is a regulated thing, a regulated entity, intermediary. So before the AIF commences the activities of raising funds and investing in any portfolio company, they have to obtain a license with SEBI. Only after obtaining the license with SEBI, they can go ahead and do their activities. So this is the final step that we get the approval from SEBI, and thereafter the AIF launches. AIF starts raising money and putting in money into the portfolio companies. Then thereafter it comes after the registration stage. There is a stage known as investor negotiations. This is what you guys as a part of the cultural committee would have been doing with the sponsors, right? Someone will be negotiating right now. No, we don't need 1.5 lakhs. We don't need probably 2 lakhs. We can probably give a silver package or a platinum package or a bronze package for you, where we'll be putting 3 or more placards of your organization in our college campus. That's how you negotiate. The same way an investor negotiation is also done, that it's more about what kind of returns they're expecting, what kind of fees or expenses they have to pay. They negotiate on all this stuff, and accordingly, agreement is finalized, and they go ahead with that terms to invest. Now, when I mentioned about that there are certain preferred jurisdictions for setting up funds, just to make it more interactive, I think you can probably see there's the world map over here. And in terms of jurisdictions, we have Mauritius as one of the primary jurisdictions which our clients set up funds, and thereafter they invest in the India market. The next comes Singapore. Obviously, it's a financial capital of the Asia, and the way it has been transparent and robust with this framework, it's a very investor-friendly jurisdiction to set up funds. As a lawyer, you will definitely have a chance to interact with lawyers from Mauritius, Singapore, and as other jurisdictions which I'll be like putting up into a screen right now. The third is the Gift City. If you guys will be following any personal finance or investment finance news, Gift City is an international financial service center in Gujarat, India. It for all technical purposes, for all regulatory foreign exchange regulatory purposes, it's a foreign jurisdiction but within India. So it's also people who are looking to set up funds, they also look at Gift City as a probable jurisdiction because of the lower cost and better incentive facilities which have been provided by the government to make it more investor friendly. Apart from these 3 jurisdictions, the Asia sector, Asia Africa sector, you can also look at jurisdictions which are in Netherlands. People, especially European clients or US clients, preferring to set up funds, they might go and prefer to set up a fund in Netherlands because of the proximity, because of the investor friendly climate they have, rather than investing coming through a Singapore routed fund. So all of this, the decision to decide which jurisdictions will be the best one depends on it's a very customized thing. It depends on what exactly your client expectations are, what exactly the client base is, what are his or her priorities. That's how we go about deciding the jurisdiction. Then the last one is obviously Delaware. These are the top 5 jurisdictions which you probably see that funds are being set up. As a part of being a fund formation lawyer, you will definitely have to deal with lawyers from all of these jurisdictions and definitely have to have some sort of basic knowledge of the laws which involve the fund formation in each of these jurisdictions. Since it's a global law, the investor negotiation, the investor returns, and the investor expectations don't really change from jurisdiction to jurisdictions. That's the advantage that you get from being a fund formation lawyer rather than working in any other practice areas compared to any working in any other practice area. This is the advantage that you get when you work in a fund formation lawyer. Apart from this, next we'll be talking about what are the different forms of AIF. If you remember in the previous slides, we talked about that category and the form of AIF decision also is very relevant. You guys will already have an idea that technically entities can be set up in the form of an LLP or a company. But our AIF can be set up in the form of a trust, an LLP, or a company. Technically, 96 or 97% of the funds that are in the market are currently set up in the form of trust because it's easier to manage. There are no compliance processes. You don't have to submit any forms filings to do the MCA as compared to that you would have to be applicable for a LLP or a company. People who have already done a corporate internship probably might have an idea when I say how MCA forms are relevant and what kind of filings or what kind of submissions will be required for a company or a LLP. Just pay attention to these slides because there will be 3-4 questions right after the end, and I will expect someone to answer those questions because that's discussed in the slide itself. Now, when I talk about AI participants, just like let's examples now again just to make it more relatable. Just like how you have a cultural committee has different wings, right? Someone who's taking care of the social media, someone who's taking care of the or treasury, someone is a secretary, someone is a convener, someone is a co-convener. Everyone has different responsibilities. That's how a fund also works. Fund also has different entities involved in the whole process. They have different responsibilities. And typically you see as a sponsor, the manager, the trustee, the investors, investment committee, advisory board, merchant banker, custodian, fund accountant. So these are the primary 8 to 9 entities which you see they take care of almost all of the 80 to 90% of the activities of the fund are taken care by all these entities. Rest 10 to 20% there might be some additional or miscellaneous activities which could be probably taken by someone else. So these are the main key participants in the fund formation process. Just to obviously we'll give you an idea about how exactly their role plays in form of a structure. So when I say the structure, you can now see that this is actually an AIF structure. Now, if you will see, just probably you can take about 5-10 seconds to see how exactly the arrows are structured. Maybe then I can speak. So yeah. So see in the middle, if you see there's an AIF fund, if you can really see that most of the arrows are headed towards the AIF fund only. So there's a fund, you pull in investments from domestic and from overseas. So if you could just see my cursor, so these are domestic investors. This is India. These are from various other jurisdictions. Overseas investors can also pull in money. India investors can also pull in money. It's like what you rather than you're not only targeting sponsors in and around Ranchi, but also targeting sponsors in Jamshedpur. So when you do that, let's consider Jamshedpur for that purposes, overseas jurisdictions, and Ranchi for an India jurisdictions. Both of the investors will be funding you. Both of the sponsors will be giving you money. You're the cultural committee over here. Now there's a manager. Just like how the manager, the word has been nomenclatured, they manage all the activities of the AI. They take all the decisions. Now, I think that's what the convener takes. That this is what exactly needs to be done. You just try to relate the roles and responsibilities, able to better understand that this is not very complex or very technical. It's something that you have been doing at the student stage, but with a very commercial sense of mind. Then there's a sponsor entity which which provides a sponsor commitment and sponsors the setup of the AIF. This could be someone within from your committee who's taking an active call that I can probably put in my capital. You want to be waiting you to make things go faster, expedite. Someone on the committee member might be putting his money from his own pockets. So that kind of activity is somehow what a sponsor does in an AIF scenario. Then we have a trustee who takes care of the custodian of the assets of the fund. This is something that akin to what a secretary or a treasurer does for your cultural committee. Now, if you see the arrows from the fund, investments are made in the portfolio companies, and thereby you get a return. The blue dotted arrows depict a return. The black arrows depict a investment or a contribution. This is when you utilize all your money to get some DJ players or get some performance artists, get some make payments to a tent or decor house. That's how. And I have also invested through different portfolio companies. When I say different portfolio companies, if you see, just to give an idea of what kind of a portfolio companies it could be anyone. It could be the ones that you're using at your daily life. Maybe a Zepto, maybe a Uber, maybe a Ola, maybe a new startup which has come in right now. Just like how you see already in Shark Tank, right? That kind of investments the fund makes in different companies. They see the potential, they see what stage, early stage or growth stage, and accordingly they make investments. So those will be the portfolio companies. That's all in brief, its structure. In case anyone has any queries or there's a hold up on this, please feel free to let me know.
So we have a question.
Sure. Not very well. Atalya, maybe you could probably translate or maybe ask her to come now.
So now
Now you're audible.
So I wanted a query that when you talk about sponsor, like in SEBI regulations, I think there is some scope of interest that the sponsor should have in the AIF. So I couldn't understand what is the reason of that interest, like 2% or 2.5, whatever. But what is this need of sponsor having an interest in the AIF fund? That
Okay. May I know your name?
so Amisha.
Yeah. Hi, Amisa. Thank you for your question, Amisa. Just to make you understand this better, let's assume that you are now pulling some funds for a specified purpose, and now you're reaching out to your friends to give you some money. Maybe you're asking 100 rupees, 500 rupees each from all of your 5 friends, and they are saying that after receiving all the 500 rupees from each of your 5 friends, you'll be putting that money to buy this one or invest in this one. This is where you can get a return. How do we expect your friends to trust them with your money?
Then
Until
my
unless you
interest.
correct. Until unless you also have an interest, right? How does that signify? How does that brought into the picture? That's only gonna happen when you gonna say to your friends that I am also investing my money in this thing. So you can be rest assured of the fact that I'll be invested in making this workable rather than just being just a broker or just a mediator. That's a skin in the game. That's the term is known as the skin in the game. That's what the sponsor does. The sponsor has a continuing interest obligation that at all times they need to have a 2%, 2.5% of the corpus size or INR 5 crore, whichever is lower. That continuing interest obligation is a sign of commitment to the investors that I'll be personally invested in this. I have a skin in the game. I'll be obligated to the AIF at all times and be in a good faith basis will be trying to make the best gains for all of the investors. That's how it works out. That's the reason why you have a continuing interest obligation.
Thank you so much.
Good. Uh,
Sorry, I don't think we have any more questions here right now.
Sure, cool. I'll just move over to the other slides. Now, when I say investors, to make it more attractive, what kind of investors you might be dealing as a fund formation lawyer? You could have sovereign wealth funds, Abu Dhabi Investment Authority, Mubadala, GIC, Temasek, Qatar Investment Authority. So these are like funds which have been set up by the or have a government already have a majority interest in them. So these funds generally you can see size in $1 billion. The asset under management could be in $1 billion, and the checks that they'll be investing or be cutting for the funds can be in 100, 200 crores, not less than that. That's how the size of the investors will be seen. The kind of high transactional values that you see on the fund formation law, these are what you'll be expecting. Apart from that, definitely we also have development financial institutions, the World Bank, the IFC, or the Asian Development Bank. You could see negotiating with them for making a transaction or completing a deal. Then you can also see some corporate pension plans for different jurisdictions. CPPIB is a Canadian pension plan board. CDPQ is a Quebec pension authority. TI is an US-based pension plan. So this is also find you also negotiating with these investors. Apart from that, university endowment funds. If you have an idea, probably IIT Mumbai also has an endowment fund this is best alumni probably put in some money and they have an endowment fund and after they make investment in private equity market. You could find yourself having a word with a lawyer from the Harvard University Endowment Fund, negotiating with them on a transaction, or a MIT endowment fund. So these are the kind of investors you typically see for investing in AIF. Apart from that, definitely you have charitable institutions which have an impact fund size. And to make it more mainstream, I think now might be more familiar with these names: Bank of America, Citigroup, JP Morgan, Morgan Stanley. These are the like kind of bank holding companies. They also invest in AIFs. You will find yourself negotiating with them, having a know-how exactly what kind of commercials they expect. That's the exposure that you get as a fund formation lawyer. Apart from that, you insurance companies, like LIC, Buzzers Alliance, Kotak Life. These are also the certain insurance companies which also you might find them investing in the AIF and be negotiating with them. Then different kind of investors have different negotiations and different kind of exposure. That's what you'll get as a fund formation lawyer. Then you have a fund of funds, NIF, which is India's largest sovereign wealth fund. You can probably can find yourself negotiating with them. Apart from this, all type of institutional investors, you also have high net worth individuals like someone like an stature of an Ajay Premji or an Nayan Murthy looking to invest in an AIF. You can definitely find yourself negotiating with them at some point of your life as a fund formation lawyer. That's a given. Apart from that, there might be some investors who are new into the market, who have got some money, but they have a high risk appetite. They might want to invest in AIF. You'll also see yourselves invest or looking to negotiate with them as well. Now, if you remember, we had talked about that there are different categories of AIF. When you talked about that AIFs can be also set up in different forms. Different categories of AIFs are meant to cater to different situations. Category 1 AIF, just like you see right on the table, they are supposed to invest in startups or early stage ventures, or an SME infrastructure sector, or sectors or areas considered as more socially or economically desirable. So in this sense, I just wanted to give an idea. Let's say, for example, whenever you watch an episode of a Shark Tank, you most probably become exposed to the companies which you don't even know of right now. Someone like a Snitch, the clothing company, or someone like any other entity which are very new into the market. You must have heard about the term pre-revenue stage, revenue stage, or early stage. So these are the kind of startups which need some money, but they don't need that much of money. They probably 1 crore, 2 crore is good enough for their funding. And AIF looking to invest in such companies, they prefer to be set up as a category 1 AIF because the intention for them is to invest in such companies at an early stage and not cut big checks. Not someone investing 50 crore or a 100 crore check, just limited to 2 crore or max to max 5 crore. That they go for a category 1 AIF. The details of obviously some more technical, we can obviously talk about sometime later, or you guys can probably read up on the laws. On the category 2, now someone, let's say for example, a clothing company Snitch coming to the Shark Tank India for a funding. Now you have never heard about them, but they just need some 2 crore funding. But at the same time, you definitely know about Alan Sori, definitely know about Vanos, and definitely know about BlackBerry. So those are reputed companies, right? Or housed on the Aditya Birla Group. Now, Aditya Birla Group will obviously not require a 2 crore or a 5 crore funding. They will look for a better funding, a 50 crore or a 100 crore ticket size, because they're at a very later stage. That's when AIFs which are looking to invest in such kind of companies who are at a very matured stage of revenues and investing, they go for setting up a category 2 AIF. They can invest in, this could be private equity funds or debt funds. These are the specific category 2 AIFs are the cream, which you as a daily basis you see 100 crores, 500 crores, 1000 crore funds being set up. We as a fund formation lawyer, we have been enrolled in practice areas, mandates, setting up India's largest climate tech focused fund, setting up India's largest sovereign wealth fund, which goes into thousands of crores as well. So you see yourself as a lawyer who have assisted the whole team in handling that matter. That's what a fund formation lawyers has an USP in terms of the high transactional values. Apart from the category 1 and category 2, you will also have a category 3, which is more like a very high risk thing. It's a more about trading sort of thing. They are allowed to trade with the view to make short-term returns. It's just like in the market, if someone is very much invested in the stock market, they would have an idea about a trader, an FO, an option trader, and an investor. The kind of difference that you see from an investor and an option trader is somehow similar to how you see a difference between category 1 and 2 as compared to category 3. Apart from that, you have a specified AIFs which are supposed to be only do some specified activities as per the AIF regulations. Currently, this has just been launched. We do not have any instances so far in the market coming up, but definitely in the next 5 to 10 years, we're definitely gonna see something. In terms of the key features, I think I'll just go brief because it's like you can see the category 1, 2, and 3, they could be closed-ended and open-ended. When I say it's a term that you need to have a specified term, minimum of 3 years, technically 10 year to 12 year is generally the term of a fund. Continuing interest, I think just like how Amisa asked the question, why do they have an interest? This is how the interest is required to be done, 2.5% of the 5 crores, whichever is lower. Listing is one feature which if someone wants to list the units, they can do that only after achieving the final close. Talking about the first close, final close, this is something more technical. We might discuss that in some other time. Maximum investors. You might be wondering some fund, how much will be the limit, right? Now, when as a cultural committee, definitely you're not reaching out to thousands of people. You can't do that. You have to have a limit that you can only have 5 to 10 sponsors for your cultural event. That's how in AF also does. AF, they have a maximum limit of 1,000 investors, not more than that per scheme. And now minimum investment. Remember, I gave an idea how a mutual fund you can invest as low as 500 rupees. But for making an investment in AIF, you need to have at least 1 crore in your bank account as net worth. Obviously, you or not even me, we cannot invest in AIF. Mutual fund is a good investment option for us. But for whenever you, at some point of time, even you guys will see yourself earning that much, right? So let's say after 15, 20 years, the moment you have 1 crore, 2 crore money, you would like to invest more in the high, you have a high risk appetite. Because 10% return on 1 lakh and a 10% return on 1 crore is way different. You understand the mechanics. That's what is targeted at high net worth individual investors. When I said that, how it is different for the mutual fund. There are certain investment restrictions. You remember I talked about the diversification of portfolio. That ensures that you cannot invest more than 25% of your corpus in one company. You cannot invest 100 crore in a particular company. You have to invest in 4 different companies, 25 crore base. There are also investment restrictions of category 3 as well. Annual audit and books of accounts is like how you have, just like how a company and LLP has a requirement for their books to be audited annual basis. They have to hold general meetings and stuff. They're more like reporting obligation, compliance obligations. Similar sort of things are also being applicable for an AIF. Now, in terms of documentation, if you remember, I talked about that drafting of the fund documents relates to indenture, IMA, PPM, and contribution agreement. This is just a thesis like what exactly it will involve. It's something that you gonna have to deal on a day-to-day basis when you become a funds lawyer or you intern with a funds team in some law firm. After that, maybe this is very important from a student perspective to know exactly what it holds for you. Now, I guess if I can just listen to someone saying yes, that you guys have now a basic idea. Maybe you guys can confirm that you guys have a basic idea of what exactly an AIF is. Then I'll proceed with giving you a brief idea of the insights and opportunities.
Yes, sir, it's clear from their side.
It's not bouncing off anyone's head, right? Just to clarify.
No, sir, we got it.
Cool. I'll just talk about the insights and opportunities. So just to make it more interesting, just see the figures, see the transactions, the value. The global private equity market is probably pegged at $655 billion. It's not million, it's billion, and it's not rupees. It's again dollars. Just see the value, how probably you'll be a part of those transactions contributing to the economy of a whole market. Even in India, the AIFs are probably pegged at to go at a 25% year-on-year growth for the next 3 years. The kind of work that you see, the kind of investment that you're gonna see is gonna have an uptick. So that's very essential for you guys to know, because by the time you graduate, it's gonna be another 2 or 3 years, or maybe next year or to next year. So you can probably see that there is some sort of potential in getting into this field. Now, obviously, in terms of skills as an investment funds lawyer, what you be requiring? Analytical thinking. You need to have that sort of an analytical bend of mind that sometimes the commercials might be too tough for you to understand. So it's essential that you think through from a logical and analytical perspective as well when you go about reading on stuffs. It's not akin to what you do for let's say let's say you read up on company or something, you understand how exactly, just in a literal sense, but you have to now analyze and see how exactly that works out on a commercial sense as well. That's very requisite for a funds lawyer. Structuring expertise, just like how I showed you that we talk to the clients and decide what kind of jurisdictions will be the best one fitted for them, and then you go about discussing these things. So this is very important. This is something that you should be acquainted yourself to making more PPTs, to be fluent with Microsoft Excel, Microsoft Word as well. That will come handy for you. Business understanding. Now, when I say business understanding, definitely when you advise a client, it's also important that you understand what the client is intending to do. Either the client is intending to invest in this market or that market, what will be the best advice for the client. So this is where you have to have somehow be acquainted with the business understanding. Like logistics, you at least have understanding of different sectors. What are the sectors which are in trend in the market right now? Climate, renewable energy, green. These are the sectors which are currently in the prime. Then you can also see technology, e-mobility. You need to have a basic understanding what exactly is happening in the market. That's an important skill set for a funds lawyer. Apart from that, financial literacy. When I say about financial literacy, definitely I don't expect you guys to have the ability to read up balance statements. But if you're going to do that, it's well good and enough. But at least equity. What is equity? What is return? What is a management fee? Or maybe what do I say? What is debt? What are the difference between a hybrid instrument or debt instrument and an equity instrument? This kind of financial literacy is important for you guys to become a part of a funds lawyer or funds team. When I say transnational proficiency, I have already discussed about how you need to deal with lawyers from different jurisdictions to set up funds in different countries. You need to have that affinity to learn more about the international laws. I mean, you can just put your hands up. No, I'm not well acquainted with Singapore law. I'll not take an interest. But the more you take an interest, the more beneficial for you because it has a global value. You deal with lawyers. You come into the limelight. You also know about a lot about different jurisdictions. That helps you grow into your career as well. Drafting and negotiation, just like how you already been doing as a board of a moot court competition or ADR competitions. This is how you build up your skill. This is anyway essential for every practice area. This goes without saying. I guess you guys will already understand this and already been implementing in your internships as well. These are the list of legislations which you guys have to probably be well versed with while working as a funds lawyer. You can see that it's mostly related to SEBI laws. So be very prepared that you're gonna deal with SEBI websites and SEBI on a lot on a very frequent basis. If someone has an average towards SEBI, then probably time to rethink. You might want to have an affinity rather than being averse toward all these things. Then to give you a difference between the PE practice and the investment fund practice, I think most of the people here have worked in corporate law teams. I assume that. Atali, I think you can confirm that if people have already worked in corporate law firms, corporate teams of different law firms.
Yes. Yes.
So as a corporate, I think whenever you have interned as a member intern in a corporate law team, this is exactly what you've been doing as a PEVC practice area. You might be doing due diligence, you might be working on the restructuring the corporate governance, you might be working on SHAs, SPS. So these are documents that you work in. But as a fund formation lawyer, we technically come at a stage before them, right? You might be when I say stage before them, just like how I said that we pull in money and thereafter we make investments. On that investment stage is what a corporate law team does. But before the pulling money stage and the formation of that whole entity, that's where the fund formation lawyer comes into the picture. And since I already give you a brief idea, I think you're probably able to relate to how the difference is setting out. Might be just take 1 minute probably to read through this differences. Then I will just move forward to the next slide unless someone is halfway reading this. Okay, I'll move. Now I think after all this brief idea about investment funds, you must be wondering why do we need to investment? Why do you want or why you should join an investment funds practice? I think I have given enough reasons while discussing every aspect or every fundamentals of the AIFs. Just to make it more brief, it's a more niche practice area, dynamic and ever-evolving practice area. If you see the funds regulations, those are framed in 2012. It's hardly been 10 years now. So it's anyway gonna be evolved. There's a lot of potential for an uptick. It's a very niche. I think people right now, at least 98% of the people in this class, I'm very sure they will not have any idea what exactly investment funds is, or they will not even heard about this term even before this webinar. Maybe it's very much possible because that's what I have been in that position before. So it's a very niche practice area. You might only see only 5 to 6 tier one law firms having a full-fledged investment fund practice team. So definitely gonna be have a high demand. There's a supply demand gap as well. Gonna be high demand, low supply. Unlike as compared to a corporate team where you always have people in abundance, high supply and low demand. So maybe it's a time for you to understand these basics and think about it, making a career in this practice area. Cross practice work, definitely also have to have some understanding of tax, regulatory, and corporate. That makes you a well-rounded individual, but not only stick to only one practice area, only one set of laws. It's a multifaceted thing. International scope and multi-jurisdictional access and exposure. Just like how I said, we'll be dealing with lawyers from different Singapore, UK, US. There's a good possibility that even we might be getting some opportunities from foreign law firms to get in onboarded to their law firms directly without an LLM. That has happened for a funds team. That will probably continue to happen for the next 5-10 years, which is unlike any other field where you probably have to go and do an LLM and then make a transition to a foreign law firm. So there you see an uptick. There you see a good one and potential for you to consider a practice area. Exposure to all skills of business, just like how I said, a category 1 and category 2 investment at different stages. You understand that very well now. You're being a part of the market as a funds lawyer. High stakes transactions, just like I said, that every matter that probably that I have dealt with in my 3 years, I haven't seen a matter which is like below 80 or 100 crores. I have only seen 100 crores upwards of fund being set up. So that's how the high stakes transactions you will see yourself being involved with. And when you see yourself being mentioned as a part of the deal, was probably a $700 million or a 1,000 crore fund, you're gonna find yourself that you're doing something good. In such a market trends, obviously, it's very important to be well versed with what is happening in the market, because anytime that will also help you to also have a more interest in your personal finance. The more you advise the funds, you're not only going to only advise your clients to gain returns, right? And some point of time, you also think about your returns as well. You're gonna invest in the market as well. So that's the best way to do that will be to working as a funds lawyer and then having a know how the market functions. Unless anyone has any questions or they want to know about the practice area more, it's time for some questions. There are 3 questions for you guys. I expect people, I had already given you a heads up why you need to be attentive, and already also given a heads up there may be some questions as well. The answer to these questions are very straightforward. I already discussed in the PPT. I will now have the floor open. Atali, if anyone is probably looking to answer the question, you can probably ask him or her to come down to the podium and say just be closer to the mic.
Yes, sure, sir.
Cool, then I'll just go forward to the questions now. Okay, so you have the question before your screen right now. What forms can an AIF not take?
So they are answering D and E, liquid and solid.
Okay. Correct. My good answer. But there's no reward for it. It's not a KBC. Okay. But yeah, that's correct. Just like how we discussed that the different forms can be limited partnership company, LLP, a company or a trust. Glad that you guys are being attentive. But anyway, it's very easy also to rule out both of the options. Now, the next questions. Which of these parties are involved in an AIF application to SEBI?
So it's C and D, sponsor and merchant banker.
Okay. That's again correct. I'm just wondering whether the options are very obvious for you to rule out, or is it you guys are being attentive throughout the webinar? I hope it's the latter one. Now, probably next to the last question. Who among the following may not have obligations under the AIF regulations?
Let's see. Pray for Rihanna.
That's pretty obvious. Unless they are having their own AIF or they are being a manager for some AIF or being a trustee or being a sponsor. Unless they do that role, they are not going to have an obligation on the AIF. Now I think I'll have the floor open to any kind of questions they would have on the fundamentals or the insights or how exactly can build up a career in this practice area. Happy to answer if you guys have any questions. Before that, I hope everyone was able to go through this fundamentals in a good manner, like you don't have a hiccups in understanding the technicals.
Any doubts for now? Okay, Amisha has few doubts, sir. Amisha will be here. So first of all, sir and ma'am, thank you for being here. I have two doubts. My first doubt would be, can an AIF invest into another AIF? Like, for example, an AIF is in the form of a company. Can it invest into another AIF?
Sure. See, when I say about different categories of AIF, category 1, category 2, and category 3, category 1 and category 2, they are allowed to invest in the units of other AIFs as well. If you see, I had discussed about a fund of funds thing in types of investors. So what does a fund of funds does? So when you're setting up an AIF, that particular fund can invest in the units of another AIF. When that particular fund does that, so it becomes a fund of funds. Rather than having a direct strategy to invest in different portfolio companies, they're investing in units of other AIFs. So that is allowed, but that depends on the category-wise specifications. When I say category specifications, if you see that there's a subsectors under category 1, there could be VCF, there could be SME, there could be infrastructure fund. A VCF can only invest in units of another VCF. It cannot invest in an SME fund. That's the restrictions. So with restrictions, they can invest in units of other AIFs as well.
Next question. When we are talking about India as a desired regime for AIF, what should be the regime lacunas in the steps? Is it like a desirable destination for AIF as of now? What can be improved? Some comment on that.
You're talking about how India how the AIF market is probably poised to grow in India. Is that what you're looking to have an insight on?
Jurisdiction also.
Sorry, will repeat.
As a jurisdiction also, for example, in AIF, with a company or an investor, prefer AIF incorporated in India and
Okay. So on that note, I think it's also important to know what kind of clients you're dealing with. So right now, if you go through the slides, I think there was a slide where we said that a decade back, it was mostly foreign investors looking to set up AIFs and invest. But those are the main investors. Now, 80 to 90% of the funds that are being set up are by domestic investors. Given the market is right now in a developing phase and is poised to grow at a good growth, the kind of GDP growth that India is facing, definitely there will be a lot of investment activity in the market. The more the amount of investment activities that you see in the market, the better the chances for fund houses, for good investors, for fund who has a good amount of capital, they're gonna look to set up AIFs and accordingly invest in potential untapped areas. So that's going to happen in India. I think even that's our estimates and the figures are also stating that in the next 3 years, AIFs are poised to grow around 25%, year-on-year basis. The AIFs have now become such large. I think the last 3 or 4 years, they have grown exponentially, almost doubled in the last 4 years as compared to what they was initially for the first 6 years, from 2012 to 2020 for the first 8 years. After COVID, there have been quite an amount of uptick. Reason why the size has been going at such a fast pace that SEBI is trying to regulate it more and more. I think these are very evident signs that AIF is only here to grow and not to have a stagnant at any time soon, at least for the next 10 years.
Thank you so much.
Hello, sir.
Yeah, hi.
Yeah, I have a question related to the current ongoing market situation. For example, if you look at the Byju's, their valuation is dropped from $21 billion to $77 billion 2 months. So where do you think there is lacuna in our Indian system that it is affecting our startups? Our startups get overvalued and it is actually valued. Did you get my question, sir?
Yeah, sure. So see, valuation is a different ball game altogether. When it's depends on how exactly it's evaluation. Just to understand from a technical side, obviously from a when you see a news report, you understand this is the valuation has dropped. How exactly you are not probably doing good at this phase. But at the same time, it's a two-way responsibility of the company as well as of the investors as well. The company's valuation depends on how exactly your revenues are being projected, what is your net profit and net loss, how your what are your business plans. So there are like three or four parameters on how you project your revenues. Sometimes the companies that you probably see right now, they have, if you understand, there's a concept called overvalued, undervalued, and rightly valued. Stocks which are now overvalued, under you probably figure investors figure that out that this stock is now going in an overvalued stage, and that's when they start withdrawing from the investments. And the more they get their investments offloaded, the value of the company also starts to decrease. And ultimately, it comes to a position where it is actually at a correct value. So that's how it works out the market. Technically speaking, just to answer your query specifically, for a company such as Baiju, a decrease in the valuation is actually more about a correction in the accurate valuation rather than being a negative thing for the market. It's actually a wake up call for the market and for the companies as well to understand that the valuation needs to be properly valued. If you remember, I think since you're asking me this question, I think you obviously would have an idea the Mamaearth IPO thing.
Yes.
When Mamaearth IPO happened, I think the valuation was so high. It was such a high stock. Probably the IPO fell down just because of this reasons. And there's a lot of trending in the market that Mamaearth's IPO stock is overvalued, and that's how people have the investor knowledge. Investor awareness is quite up in the market right now. At that point of time, they could have gone ahead had the investor not been aware. So, but now it's when they gonna relaunch the IPO, they have to have a good valuation IPO rather than being an overvalued IPO. It's a good thing for the market. The more the investors are aware, the more correct valuation companies you see, the less overvalued companies you see. Valuations are not a accurate or not a perfect parameter to judge how a economy is running or how a company is performing.
Okay, sir. Just one more question. So you talked about the gift setting of India, Surat. So I wanted to ask question, with current legislation in India, do you think that it will become a next Delaware or next Cayman Island where most gift frauds are done, or like Delaware where most strict rules are there, next 7 like city?
So see, I'll just Gift City has been brought up with that concept. I mean, to be very honest, if you just give an idea how exactly the Gift City has been like brought up, the idea of the Gift City is actually coincidental. It has come from Nisi Desai Associates only. Nisi Desai was the pioneer who brought up that concept of the Gift City and probably proposed it to the Indian government at that point of time. Uh, the government has already had an idea how financial centers in Singapore, in Dubai, in UK, these are running already. Just like Delaware have these are the role models. And the way if you just go through the regulations, how the Gift City has been set up, the kind of concessions it has been provided on a taxation level, the kind of relaxation it has been provided on a regulatory level are meant to only promote it further and further and to make it a more investor friendly destination for foreigners who are looking to probably set up the funds in Mauritius and Singapore to become a better alternative to them. That is going to happen. That's a phased manner. It's already been happening. We're seeing quite a good amount of activity in the Gift City space. I think in the last 2 or 3 years we have around 60 or 61 funds already have been set up in Gift City. When I talk about funds, I'm talking about category 1 and category 2 AIFs, 3 as well. So the next 6 years, there has been Gift City, the IFSC committee, it has been separated from SEBI, just like so that they have their whole autonomy on the whole process and go about the faster approval thing. So these all activities that you see are aimed at making it more proactive and more investor friendly. Obviously, right now there has been some sort of hiccups, like just like how you compare to Delaware. If you understand, Delaware has a very simple structure. You form a Delaware LLC, it's very simple to operate. You don't have anything to think about. Gift City still you have to probably set up a fund or a company or an LLP. This is something like what you have been proposing that probably this is something can be done. These are the certain changes which can be probably done to the existing framework and can be make it more workable. IFSC, just like how it's a separate regulator, they has been very proactive working on those aspects. And we can definitely, that's why reason we see some change in the other is coming up in the Gift City every 3 or 4 months. They're still evolving. The more they evolve, the more they're gonna be promoted. Next 5-6 years, it also depends on the elections as well. 2024, BJP comes into power, I think, yeah. So that's how it will be. Gift City is definitely here to grow only.
Okay, thank you very much for your answers.
Okay.
Do we have any more questions? Okay, so we have one more question.
Okay.
Hello, ma'am. My name is Archie, and I just wanted to ask a question from the investor's perspective. So, from an investor's perspective, what are the probable risks that are involved in actually investing in AI? Maybe what are the major lacunas in the regulations which are present as of now, which a lawyer should know while advising the client that these are the lacunas and we should keep this into consideration while you're investing in AI?
When you talk about major lacuna, or you talked about major considerations that a lawyer should make the investor or the client know of?
Maybe the major lacunas and the considerations combined, I am asking.
Okay, so I think it's a whole rounded thing. It's important for a lawyer to make the client understand what are the legal intricacies of you investing. For example, someone looking for, I'll just give a brief example. A foreigner investing into an AIF directly, we will probably not ask them to probably go and directly invest in the AIF because they will have to file their income tax returns, get a PAN in India. We typically advise them to set up a feeder fund in different jurisdictions and have that fund invest in India because all of your compliance and obligations will be on the fund rather than on you yourself. So this is just one example how we advise and how we take into law into account and give a practical and suitable commercial advice at the same time being legally compliant. In terms of regulations, just like I have said, and to give a brief idea right now, you understand the sponsor commitment. I think Amisa asked this question that you need to have a 5 crore investment minimum. Now, definitely, you can also have a co-sponsors. If some clients comes up and asks that we do not really have that kind of money, but I, along with maybe Archie, Atulya, and Amisa together, you guys can fund. But Amisa herself will not be able to fund. That's when we decide that both or three of them together should at least reach this 5 crore corpus. Maybe your net assets value. That's how we can work it out together. At the same time, just like it's a commercial thing which you are working out, but at the same time, we are making it compliant with the legal requirement of 5 crore as well. So these are the kind of advices, these are the kind of work that a fund formation lawyer has to take into account. It has to consider what are the financial standing of the client, what are the client is exactly looking to invest in, what are the residential jurisdiction of the client. So these are the 3-4 parameters which are very considerable, which are very crucial for you to provide them a commercial and workable advice. We're here to provide a workable and practical advice rather than just giving a legal advice. No, this won't be permissible. We have to think about a way how we can make this work better. Rather than outrightly saying, you guys cannot invest. Amisa, you cannot invest. Archie, you cannot invest. Atali, you cannot invest. We can probably say that you three can come together and invest. That's how we're gonna work out. Just like if you say, I think I discussed about how category 1, 2, and 3 and AIFs are different. We talk with the clients, we ask them what exactly their investment strategy is, at what phase they're looking to invest in. Accordingly, we go ahead and advise them to go for a category 1 AIF or you go for a category 2 AIF. So that's how there's an interplay of commercial as well as legal things.
Just in a follow-up, so like considering the particular nature of AIF and the volatile nature of the market, are there any particular risks that are attached just to the AIFs and like one should be mindful of them?
Sure. So before you answer this query, I think there's another follow-up answer I'd like to answer on your first query. So when you talk about lacuna now, I mean, obviously whatever is lacking in the regulations, we won't be able to fix it right at that point of time. We probably might be able to, you are already giving recommendations to SEBI and the IBC to formalize the regulations in a better manner to make it more relaxed. But those are going to be framed only after a point of time. So at that point of time, it's important for the lawyer to understand how they can work through that out for the client, rather than just giving a representation and waiting for them SEBI to carry out. It's like this. I mean, you guys are in college, you guys learn also understand that you guys don't wait for the administration to make a change. If you see that not happening, you guys go and protest. That's how they do, right? So that's how a lawyer has to do. Be proactive and more actively work towards it. Now answering your query on the risk thing, I think when I said about a PPM, that PPM is a very important document when you go about the drafting of the fund documents. A PPM is more like a marketing document. It's like there's a specific chapter known as risk factors that gives an idea of what are the operational risk, what are the management risk, what are the investment risk, what are the sector risk. Give an example, maybe investment risk, you might say that right now the tech market is not that going good. There's a risk that your investments might not be giving that much of value. Operational risk, you might see your employees who are the key employees moving out of your fund house to another fund house. You might need some time to do that transition. Then operational expertise, you might not have that much of capital at some point of time. All your investments will be in stocks and listed and unlisted securities. You will not have liquidity at that point of time. So these are the kind of risks that you already have foreseeable. AIs are meant for high risk appetite people. They already know this stuff. But as a disclosure, we have a specific 20, 30 page of disclosure that is goes in the PPM document, giving them a total idea of what exactly the risk will be associated with you making an investment in as AIF. So that's how the disclosure works. And as long as the investors are fine to invest in, they go ahead and invest in the market.
Thanks for the basics.
Yeah.
Do we have any more questions? I don't think so. We have any more questions. So as we wrap up the webinar, I would like to give a heartfelt gratitude to each one of us for joining, Nandini ma'am and Divya sir for taking out their important precious time for giving us such insightful information and also making it so interesting with a few last questions on Drake and Rihanna. I would also like to welcome our faculty convener for the recruitment committee, Mr. Shubham Srivastava, for giving you a vote of thanks. So,
Thank you, David. It's really nice to meet you virtually after a long time. And
Hi, folks. How have you been doing?
yeah, I'm good. I'm really happy that we hosted you, though virtually, and we are hoping that we can host you physically also sometime soon. And I'm sure our students enjoyed a lot. Such an important issue that you addressed. I'm really happy and really sure that our students learned a lot out of the session. And thank you once again. Thank you.
My pleasure, sir.
thank you so much, Nandini ma'am, for joining us today and Divya sir for giving us so much insightful information. We would like to continue this and look forward for welcoming you again physically, if possible, and definitely online. And thank you so much, sir. Thank you so much, ma'am, for giving your time.